Welcome to the Deep Dive. Today, we're looking at something really practical for probably a lot of our listeners. Pennsylvania drivers.
That's right.
What's going on with auto insurance affordability? Looking ahead into 2025.
It's a big question on people's minds, definitely.
Yeah, and we've got some detailed insights here from an analysis by Mooney Brokers. And our mission really is simple. We want to give you the key factors that are shaping your premiums right now.
Figure out the trends.
Exactly. What the trends look like, and importantly, what it all boils down to for you personally.
Because it can feel pretty complicated, right? All the REITs and regulations.
Totally. But we're going to try and unpack the most important pieces so you feel informed, but hopefully not, buried in the details.
Sounds good. And what's really interesting, I think, when you look at the Pennsylvania auto insurance market right now, and what this Mooney Brokers analysis really highlights is this constant tug of war.
A tug of war. Between who?
Well, between the insurers, who are facing some very real increases in their costs.
Okay.
And then on the other side, the need, and let's face it, the desire for affordable insurance for consumers. For you.
Right. People need to be able to afford to drive legally.
Exactly. And this analysis, it really zeroes in on that balancing act. They point to things like rising repair costs.
Which seem to be going up for everything.
They really are. And the increasing expense of medical care if there's an accident, even higher costs tied to legal proceedings. All of these things are creating this upward pressure on the premiums you end up paying.
So it's not just random, like insurance companies deciding to charge more.
Not entirely, no. I mean, there are genuine cost increases happening behind the scenes that they have to account for.
Got it. So these aren't necessarily arbitrary price hikes. There are tangible reasons why the insurer's costs might be climbing.
Precisely. Which then, can trickle down to what you pay. And to make sure those increases are actually justified, Mooney Brokers also talks about the pretty significant role of regulatory oversight in Pennsylvania.
Ah, the regulators. How do they fit in?
Well, these regulatory bodies, they're there to scrutinize rate adjustments. They make sure they're based on actual cost increases.
Okay.
And that you, the consumer, aren't being, unfairly charged.
So it's a check and balance sort of thing.
Exactly. It's a system that's intended, at least, to create some transparency and balance between the insurer's financial needs and, well, protecting your wallet.
Okay, let's dig a little deeper then. I've definitely heard chatter about overall insurance costs going up, but Mooney Brokers also makes this important distinction, right, between the general trends and what I might be seeing on my own bill.
That's a really key point they make.
So what's the overall picture they're painting? Is it all doom and gloom or?
Well, the data they refer to actually suggests we're seeing a trend towards stabilization, overall premiums across Pennsylvania.
Stabilization. That sounds better than constantly rising, I guess.
It does. That's the broad view, the average picture. However, and this is really crucial for you listening, to understand your own situation could look quite different.
Okay. So the average might be leveling off, but my specific rate could still be going up or down.
Exactly. Think of it like the average temperature in a room. It might be 70 degrees overall.
Right.
But one corner by the window could be much colder and another near event much hotter. Your insurance premium is like the temperature in your specific corner.
That's a great analogy.
Okay.
So even if the general market seems to be calming down a bit, my own premium could still be on the move. Why? Why that potential disconnect?
Well, it really comes down to the dynamics of the insurance market itself and maybe more importantly, your individual risk profile.
The risk profile.
Yeah. Mooney Brokers gets into this. They explain that historically, when insurance companies saw claims happening more often, and those claims are getting more expensive to settle, think bigger repair bills, higher medical costs,
right,
they basically had to adjust their prices upwards to cover those increased payouts. It's fundamental to how insurance works. They're managing this big pool of risk.
Okay, so more accidents happening, or maybe just more expensive accidents overall, can lead to everyone potentially chipping in a bit more through higher premiums.
Yeah.
That makes sense, unfortunately.
It does. But here's where it gets a bit more nuanced and maybe encouraging for some people.
Oh, good news.
Well, potentially. Mooney Brokers highlights a more positive development, especially in the personal auto insurance segment.
Okay.
They point out that advancements in how insurers model risk, basically how they predict the likelihood of someone like you filing a claim.
They're getting better at predicting.
Yes, more sophisticated. That, along with increased competition among insurance companies, seems to be contributing to a more stable pricing environment for some drivers.
So if the computers or the models identify me as lower risk, I might actually see more consistent pricing.
You might, exactly. Think of risk modeling like this. It used to be maybe just age, zip code, driving record.
Pretty basic stuff.
Right. Now, they might also analyze, the type of car you drive, maybe how often you drive during rush hour, lots of other data points. It gets much more granular.
That's encouraging, yeah.
Yeah.
Especially if you consider yourself a careful driver. But it still loops back to why my experience might differ from my neighbors, right?
Precisely.
So even with these sort of broader, maybe positive shifts happening with modeling and competition, the specifics of my situation are what really drive my rate.
That's what Mooney Brokers emphasizes, yes. Factors directly tied to you. Things like your driving history, any past accidents, tickets.
Okay.
Your credit score, interestingly enough, often plays a role.
Still, I thought that was controversial.
It can be, but it's still a factor used in Pennsylvania and many other places. And even specific changes you make to your policy, like changing coverage levels or deductibles.
Right.
All those things can lead to premiums that don't necessarily track with what's happening in the overall Pennsylvania market average.
So the big trends give us a general direction, maybe, but my personal details dictate my specific price tag.
That's a very good way to put it. Your profile is key.
Okay, so let's really zero in on those personal details then. According to this Mooney Brokers analysis, what are the absolute key factors that are directly influencing my auto insurance premium right now in Pennsylvania?
Okay, they identify several core reasons. The first one, and maybe the most direct, is that link between claims frequency and severity.
We touched on that, yeah.
Yep.
More claims, more expensive claims.
Exactly. If there are more accidents happening in your general area, or if the accidents that do happen result in, say, bigger payouts for injuries or really costly vehicle damage.
Like these new cars with all the sensors.
Precisely. Those repairs are expensive. So insurers have to cover those costs, and that often translates to higher premiums for everyone in that particular risk pool.
So even if I'm a super careful driver, if there's just a spike in accidents around me, my rate could still go up.
It could, yeah. It feels a bit unfair, maybe, but that's how the pooling of risk works.
I see. We're kind of all in it together, regionally at least. Okay, what else is on their list of key influencers?
Next up, Mooney Brokers points squarely at economic conditions.
Like inflation?
Exactly like inflation. Think about it. The cost to repair your vehicle, it's gone up. Parts cost more, labor costs more.
Tell me about it.
The expense of medical treatment if someone gets hurt in a crash, that's risen too. Even legal fees associated with claims can be higher now. Mooney Brokers connects these rising costs in the wider economy directly to the pressures insurers are feeling.
And they pass that pressure on?
Often, yes, in the form of higher premiums for you. So here's the kicker. Even if you have a perfect driving record, if the general cost of everything related to accidents goes up, you could still see your premium increase.
Okay, that one's a bit frustrating because it feels really out of my control. But I guess I understand the economic reality behind it. What other forces are pushing or pulling on these rates?
Another really important piece, which Mooney Brokers highlights, is regulatory oversight. We mentioned it briefly.
Right, the checks and balances.
Exactly. The Pennsylvania regulators, they act as this crucial check on the insurance companies. The insurers can't just raise rates whenever they want.
They need approval.
Generally, yes, for significant rate changes. They need to convince the regulators that any proposed increase is legitimate, that it's based on actual increases in their costs, claims, payouts, operating expenses, rather than just, trying to boost profits excessively.
So the regulators can slow things down or even say no.
They can. This regulatory scrutiny can definitely act to moderate how quickly your premiums might change. It adds a layer of justification.
Okay, that's good to know there's a system looking out for that. Now, what about the insurance companies themselves? Are there things they're doing internally that directly affect what I pay?
Absolutely, and this is where it gets interesting again. Mooney Brokers emphasizes risk assessment enhancements.
That sounds like the tech stuff we talked about, the better modeling.
Exactly. This is where we see some potential benefits of technology filtering down to you. They explain how advanced data analytics are allowing insurers to get much, much more sophisticated in understanding and predicting risk.
So they're getting smarter about figuring out who's actually likely to have a claim.
That's the goal. And it means they can personalize rates more effectively. Now, the potential upside for you here is significant.
Oh, so.
Well, if you are demonstrably a lower risk driver, maybe you have a long, clean driving record, maybe you don't drive much, whatever the data shows, these more refined methods can lead to more stable and potentially even lower rates compared to someone assessed as higher risk.
So that's maybe how some drivers are seeing those stable prices we discussed earlier. It's not just random luck.
It's less likely to be random luck, yes. It's like the insurance companies are finally getting better tools to identify and maybe even reward those lower risk individuals. The key insight is that better data could lead to fairer pricing.
Okay, that makes sense. It connects back. What's the final key factor Mooney Brokers identifies?
The last major factor they really dive into is local and demographic variations.
So where I live matters.
A lot.
A lot. Where you live within Pennsylvania can have a huge impact. Things like accident rates in your town or county, the average cost of car repairs in your specific area, even things like theft rates or weather patterns can play a role.
Wow, okay.
Mooney Brokers stresses that your specific geographic location, combined with your personal driving history and again your credit score, all feed into creating your unique risk profile.
And that determines my premium.
That ultimately determines your individual premium, yes. So someone living in, say, a dense city center with higher accident stats might pay more than someone in a quiet rural area, even if they drive the exact same car and have identical driving records.
Okay, that gives me a much clearer picture now of all these different threads, how they kind of weave together to influence my auto insurance costs. It's definitely complex.
It really is. Now, Mooney Brokers also touches on something else interesting, how my own actions as a consumer can have an impact. How does what I do affect my premium?
Yeah, this is an increasingly important area, actually. It's where you potentially have some real agency.
Agency, I like that. So what are we talking about?
Well, Mooney Brokers highlights that drivers are just becoming more informed, more proactive.
People are shopping around more?
Definitely. That growing trend of using online tools to compare insurance rates and coverage options, it's really shifted the landscape.
You can get quotes pretty easily now.
Exactly. You now have much greater access to information, which empowers you to make more informed choices about what you need and potentially find more competitive pricing. You're not just stuck with one option.
Absolutely. I know I've spent time online comparing quotes myself. And it really does feel like you have more control when you can see everything laid out side by side.
It does. And then there's the whole area of telematics and usage-based insurance programs.
The little plug-in things or the apps.
Precisely those. Mooney Brokers specifically mentions these. And if you are a safe driver, these programs can offer really tangible benefits.
How tangible? Like real discounts?
Potentially significant discounts, yes. By allowing your insurer to monitor your driving habits, things like your speed, how hard you brake, maybe your total mileage, time of day you drive, you can basically demonstrate that you are a lower risk. And that can qualify you for savings. It's a direct way for your responsible behavior on the road to translate into lower premiums.
I've seen those advertised. I guess there are privacy things to think about for some people.
There are, absolutely. That's a valid consideration.
But the potential to lower your costs just by proving you're a safe driver is definitely appealing.
It is for many people. And it's not just about you, the individual driver, adapting. Mooney Brokers also notes that the insurance companies themselves are adapting to this more informed consumer base.
How are they adapting?
Well, they're investing heavily in digital platforms, using data analytics not just for pricing, but also to understand risk better and to engage more effectively with customers like you.
So better websites, easier claims processes maybe?
Things like that, yes. It can lead to more streamlined operations for them and ultimately potentially fairer pricing overall as insurers develop a much more nuanced understanding of who they're actually insuring.
Okay, so it's kind of a two-way street then.
Yeah.
We as consumers get more informed and shop around and maybe use telematics.
Right.
And that pushes insurers to be more competitive, use better data, and maybe offer more personalized options.
That seems to be the dynamic playing out, yes. Technology is enabling both sides of that equation.
So looking ahead then, thinking about 2025, based on this Mooney Brokers analysis, what's the anticipated future? What should we expect for auto insurance in Pennsylvania?
Well, their outlook suggests that these advancements in technology and data analytics, they're going to continue to be really significant forces shaping the market.
More data, more tech.
Pretty much. We can probably anticipate further refinements in how risk is assessed and priced,
Which means?
which could lead to greater rate stabilization for a larger group of policyholders, as insurers get even better, even more precise at predicting risk.
Okay, that sounds like potentially a positive trend. That stabilization continuing or even expanding.
It could be.
Yeah.
However, they also mentioned some potential headwinds, right? Some
Yeah.
challenges still on the horizon.
Yes, they did. Moody Brokers definitely acknowledges that the broader economic climate,
Inflation again.
yeah, including inflation and those rising costs, we keep talking about repairs, medical, as well as the evolving regulatory environment, those things will continue to be really important factors influencing the overall costs. So technology isn't a magic bullet.
Not entirely, no.
Yeah.
Even with amazing technological progress, these external economic pressures can still have a real impact on the premiums you ultimately pay.
Right. So sophisticated data can help fine-tune the pricing between different drivers. But if the fundamental cost of fixing a car after a crash jumps significantly, that's probably going to affect premiums across the board to some degree.
That's a very likely scenario, yes. Real-world economics still play a huge role.
Okay.
And looking maybe a bit further out, Moody Brokers highlights the likely expansion of personalized insurance products.
More personalization. How so?
Well, that trend towards tailoring both the coverage options and the pricing to your individual driving habits, your specific risk profile,
Yeah.
that's expected to just keep growing.
So maybe even more options like those usage-based programs or other ways to customize your policy based on how you actually drive.
That seems very likely. It could mean even more customized insurance solutions becoming available to you as a driver down the road.
Interesting. So we might see insurance becoming much less one-size-fits-all and much more individualized in the future.
That really appears to be the direction the market is heading, based on their analysis. More data, greater personalization, and hopefully more accurate and maybe more equitable pricing for a wider range of drivers here in Pennsylvania.
Okay, so let's try and bring this all together. For the Pennsylvania driver listening right now, thinking about 2025, what's the most important takeaway from our deep dive into this Moody Brokers analysis?
I think the absolute key takeaway is that the auto insurance situation in Pennsylvania is, well, it's multifaceted, it's complex.
No easy answers.
No easy answers. While there are these signs of overall premium stabilization, which is good news generally,
Right.
your individual experience is still going to be influenced by this really complex interplay of factors.
All the things we discussed.
All those things, broad economic conditions, regulatory actions, but also, crucially, your own driving history, your credit score, even the specific characteristics of where you live and drive.
So it's definitely not a one-size-fits-all scenario. What's happening on average in the state might not reflect my bill at all.
It might not, and that's okay, but it's important to understand why. The general trends are just one part of the story. Your unique circumstances, that's what really matters for your premium.
Right. Okay.
And by having a better grasp of these dynamics, you, as a consumer, you're just in a stronger position to potentially manage your auto insurance costs more effectively. You're not just passively accepting a number.
Okay, so understanding is the first step.
Yeah.
What are some concrete actions, then, that I could consider taking based on all this information?
Well, the analysis suggests several proactive steps. First, just staying informed about these broader trends, like listening to this, is a good start.
Check.
Regularly reviewing your own driving record, making sure it's accurate, that's important too. Mistakes happen.
Good point.
Exploring opportunities for discounts is key. Asking about them. Especially things like those safe driving programs, the telematics options, if you think you're a good candidate.
Be proactive about discounts.
Definitely. And maybe most importantly, it's almost always wise to shop around. Compare insurance quotes from different providers periodically. Don't just auto-renew without checking.
Yeah, loyalty doesn't always pay in insurance, does it?
It often doesn't, unfortunately. So understanding the factors that make up your policy really empowers you to ask the right questions and make more informed decisions when you compare those quotes.
That makes perfect sense. Knowledge really is power here. So thinking about all these factors we've discussed today, the rising costs insurers are dealing with, the role of regulators keeping an eye on things, the big impact of your own driving behavior and where you live, and this increasing personalization of insurance. Here's something to think about. What specific steps might you, listening right now, explore in the coming year to get a better handle on, or maybe even influence, your own auto insurance costs? It's definitely some food for thought for all of us Pennsylvania drivers. Thanks for breaking that all down.
You're welcome. Glad to shed some light on it.